Welcome to the weekly. My name's Jessica Remy. I'm a market strategist with Moomoo. Well, markets are down this week, fearing that attacks between Israel and Hezbollah could intensify, particularly after Joe Biden said the US would potentially support strikes on Iranian oil facilities. The ASX 200 has fallen 0.8% this week, taking the market down from its new record all-time high. The US market seeing a similar fate too. Now, concern is that the market, global markets, could pull back if we see tension rise again. Plus, if we see Friday's US jobs report show the US economy is stronger than expected, then there's concern that some of those bets of US rate cuts could be shaved down, and that could hurt the market. So as we can see, having a look at the slides here, we've seen oil awaken, and that's particularly what pressured down the market. But oil prices are up 9% in 5 days, on track for their biggest weekly gain since early 2023. They're back at $73. Bets are on for oil to get back to $100 a barrel. Plus, with Middle East tension rising, as we can see down the bottom of this page, Lockheed Martin, which is the US's biggest defense contractor, their shares hit a brand new record all-time high. And so too did the ETF that tracks defence military stocks, ITA. In other news, changing pace to global markets. This week, we saw institutions put money in a big way into China's market, buying more of China's market than US tech stocks. And this has been a phenomenon that we haven't seen for some time. It's all thanks to China's stimulus. So now, as we can see down the bottom, Hong Kong's market, the Hong Kong Hang Seng, is up 33% this year. But US markets, as we can see at the top of the page, they're still up pretty strong too. They're up 20% this year. Australia's market, as we can see, is up 7%. It's got some catching up to do. As for what is fueling the gains down under, this week we can see the energy sector is up 7%, and Karoon Energy is the best energy performer. Their shares are up 13%. Australia's largest oil and gas company, we can see Woodside, they're in the mix. And all in all, as we said, the ASX energy sector is up 7%. In fact, it's up more than that on the month, 12%. If we have a look at the top of the page, Sigma is the best performer this week, up 42%, hitting a brand new record high. That's on the back of the proposed merger with Chemist Warehouse. Meanwhile, we can see there is plenty of gains in everything and anything that could potentially benefit from Chinese stimulus, with wealthier Chinese nationals coming to Australia. So buying picked up in real estate and building stocks like Fletcher Building, as well as tourism benefactors such as Lifestyle Communities and Star Entertainment. Flicking over to the US market, similar tunes have been played in the S&P 500 too. Energy stocks dominated the top 10 leaderboard. Uranium company Vistra led the pack, up 12%, hitting a brand new record high. Their shares are now up 225% this year. Constellation Energy, that's the company that's selling uranium to Microsoft and Amazon. Their shares are also doing well this week. Well, if we have a look at the oil companies, we can see Warren Buffett's backed Occidental Petroleum. Their shares are up 7%. And final thoughts and consideration, we can see Moomoo clients this week increase buying in NVIDIA, plus buying into everything and anything that could benefit from China's comeback. But if we pause on NVIDIA clients have been increasing their buying in the leading chip maker, and this is perhaps one of the reasons why chips and NVIDIA are starting to reverse. Particularly of note this week, we saw the CEO of NVIDIA, Jensen Huang, come out saying that demand for their new chips is insane. And NVIDIA is now headed back up to an almost $3 trillion US market valuation. Also of note this week, JP Morgan and Bernstein upgraded NVIDIA with a $155 price target. And that's the weekly. Leave your questions and comments and feedback in the section below. Have a great weekend.